traders at UBA said the bond market has seen quite a busy frenzy, describing activity so far this week as fastest fingers. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you for joining us today.
Thank you, Esther.
Let's get right to it. An interesting way you described activity so far, fastest fingers. Talk to us, shed more light on that for us.
Okay, let me just start with the liquidity. Liquidity has been playing a major role in the trading. We've seen system liquidity move between 750 billion to 1.3 trillion. And that has actually affected the trading on the fixed income market, especially on the T-bill side and then as well as on the bond. We've seen the yield decline for the 1 year paper, which printed 6.2 last week auction. Is currently trading about 200 basis points below, with around 4.8, 4.9 levels. So liquidity has really played a major key role in the market. Also on the bond side, we've seen yield decline about 150 basis points. For example, the 2053, which printed out at the last bond auction at 15.7 levels, is currently trading around 14 levels. So it has really affected trading in the market, and then a few traders are just trying to scramble on the fix on the little investment opportunity they can see in the market.
If this continues, how much lower could this rate go, especially for the 1 year paper? You're saying now at somewhere around 4.8%. Would there be some kind of a resistance level at some point, despite the liquidity in the market?
No, I see it go as low as 3%, 2.5%. You know, about two years ago, we've seen this yield this low. But again, this time around, you know, the current government is looking to bring in interest rate as low as possible, and that will affect liquidity in the market. And so we expect to see free fall continue.
And by extension also, lower interest rates obviously means a lower debt servicing burden for the government. Well, smart move, but obviously we're going to have to continue to watch to see. But talk to us about other developments at the market, Treasury Bills, auctions, any upcoming auctions, etc.
Yeah, so there was an auction on Friday. About 187 billion was offered against a subscription of about well over 750 billion. So wow. You can see what I'm talking about. And so that has really has really affected the market, especially on the secondary market. That's why we've seen the free fall of the Treasury bills as is were. So next week, we still expect this trend to continue. The calendar for this quarter is out. I haven't released, okay. I don't have the full details yet, but I expect that government will continue to offer and sold what they have what they have offered, especially on the T-bills market. It's on the bond market where we see huge subscription as well as a huge sales on the side of the government. Now,
this should also be good news for the corporate bond market, for corporates, especially coming to borrow, coming to raise money, of course, at yields at this level. What are your expectations in terms of a pickup?
For me, I don't think that there will be much to celebrate about, especially on the corporate bonds. The yield for me really isn't so attractive for buyers. Because, I mean, yield and price is inverse. So the prices are high now, except the corporate bond issuance can kind of like increase, do offer better what is happening at the government bond. And then that's where they can actually see a bit of attraction.
All right, let's go straight to the FX market now. Talk to us about developments, the trading ban for the Naira, expectations going forward, etc.
Yeah, as we all are aware, the government through CBN has come up with a convergence policy, which is working excellently well. However, once there's a huge demand currently in the market, and so that has actually affected the rate. It will affect the rate on the short term. I believe on the longer term, as long as there's a free, free flow and a free market, especially as it were in the time of price fixing, the economy and customers benefit more because now currently, for example, today there's been a bit of depreciation. Yesterday, market traded around 746 levels. It's currently trading around 768 levels. It will just be going up and down just that way as long as the market is free.
According to market forces. Thank you so much, Chuka. Yeah. We're going to have to leave it there. Thank you for talking to us today. Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA.